Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Welcome to this last trading day of this week. So as always, before we start looking at the charts, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay guys, so now then let's quickly jump into the charts. Now the first one I want to touch on here is the FTSE. Just a very quick update on the FTSE. I was talking about this one yesterday morning basically, and I was telling you guys to keep a close eye on this in a way, a bit of a tentative downside resistance line here taken from the high of May 2018. So of course, near there we do have a very good important area of resistance here, potential area of resistance near the 7,450 level, which is near the lows of the 1st of October and the 25th, 24th of September, around there. So basically very good potential area of resistance here, very strong area for maybe the bulls to get the bears to get in again, but before we could consider such a scenario, we would need to see this one kind of this area kind of holding the price down, and then if so, then yeah, we could see maybe another small correction here to the downside. And why I'm saying just a small correction, because we're still above this area right here, this key area of support, which now is playing its role as support at around 7,370 levels. So yesterday we saw this one sliding back down, but kind of failing to drop below this and rebounding and pushing higher. Now of course, it also failed to drive above the 3rd of April highs, but that's what we're going to continue observing today. So from the very short-term perspective, how you could in a way position yourselves for today, in a way, if we see a nice good push above the Wednesday's highs, which are near the 7,420 level, this could potentially open the path towards this 7,450 level, because it would confirm a forthcoming higher high, and then, like I said, we could then target this downside resistance line taken from the high of May 2018. In terms of the downside from the very short-term perspective, we need to see a drop below the 7,370 level. This one right here, basically this could confirm further decline to the downside here, where we could then target the 7,290 or even lower. Maybe we could in a way go all the way towards this short-term upside support line, or in a way it's already kind of a more of a medium-term one. So the line that's running here from the lows of December 2018. So a very important line here. Again, we will consider this only if we see a drop below the 7,370 level. So for now, keep your eyes on this, guys. Very interesting developments here, and let's see how this is going to perform today. Gold. Now looking at gold, it managed to rebound from this its area here of support at around 1281 zone. And yesterday I was talking about gold as well, guys, and basically I was telling you guys, if we see a drop below the 1285 level, which was the before yesterday, it was the recently established low, but we saw this drop here below the 1285, and the commodity managed to travel all the way towards the 1281, which I also mentioned here. I was mentioning the area between the 79 and the 81 zones. So it had a nice rebound from it, pushed back above the 1285, and now it's currently sitting here. Don't don't forget that we do have the US NFPs today, and we might see this one just bouncing around here up until the kind of the news. Potentially, of course, if the news comes out worse than expected, then we could see maybe gold shooting up here. But to be honest, for us, still, in order to get slightly more comfortable with higher levels, we would like to see a nice good push above the psychological 1300 level. This way we could then target the 1306 or the 1312 areas, approximately there, of course. But until it's kind of stuck here, again, in terms of the downside, we need to see a drop initially again below the 1285, but then for better confirmation, it would ideally a nice good break below the 1281 could confirm a forthcoming lower low, and we could then aim for slightly lower areas. Now I do have this one at 1276 here marked, and just to kind of show you what that level was here in the past. That was a very good area of support here back on the 4th of January, and then across the whole January it continued to remain kind of intact, this level here at around 1276, from which kind of the pair lifted off and shot up higher. So that's why this area is going to become a very important one as well, at least from the medium-term perspective, because if this gets broken, well, the path towards this upside support line that has been running here from the low of the 15th of August, so the path to this line could be open then. So that's why, guys, for now, keep your eyes on this, keep your eyes on these levels, two levels, on the downside the 1285 and the upside the 1300. Ripple. Now, very beautiful developments happening here this morning. It's the I believe that this is the best gainer for now, the best performer for now among the, let's put it that way, the top 4 cryptos: the Bitcoin, the Ethereum, of course Ripple, and Litecoin. So now this one, of course, it's wonderful. I mean, especially for those bulls here, we had a nice push higher. Now, I was talking about this one as well in my previous videos, and basically, this is where I have to admit I got one of the levels wrong. But to be honest, this is the crypto market that we're talking about. So basically, I had the level here, the 0.3320, where I had it as a nice support, and you can see why it was a nice support, because previously it acted as good resistance here on the 13th of March and also on the 1st of March, but you can see that the crypto kind of overshot it and undershot it, and kind of traveled lower and hit the area around here, around this other potential, this area of support around the 0.3290 or something, or even we could actually, yeah, it's about 0.3290, something like that, and from which kind of the pair rebounded, and now as you can see that how well it traveled higher, it managed to overcome this week's highs already near the 0.3750, so we overshot that and almost managed to reach the area around the 0.3840. So which means that now we're shifting our of course potential breakout level for the upside. Of course we're going to have it around the highs here, these recent highs. So if we in a way see this one breaking above the 0.3835 area, something like that, sorry, 0.38 35, something like that, 40. If we see a nice good push above that, then yep, it would confirm a forthcoming higher high, and our next target will be the, in a way we could say that the psychological 0.40 level, but yep, just around nice good beautiful number of 0.40. But then again, like I said, we need to see that confirmation break, of course, initially above this level here, the 0.3750, which was the Wednesday's high, and then of course just for better confirmation, a push above the 0.38, 35, 40, something like that here. So a nice good push above this that could potentially open the door towards the 0.40 level. In terms of the downside, well, it seems that the downside could be slightly off the table, but still we're going to remain with our level right here. So basically, if we see a drop below the 0.33 area approximately then yep, we could start targeting some lower areas here, 0.31 or even going all the way down towards the 0.30. For now, that's the game plan. Let's see how this is going to play out, and yep, keep an eye on the price action. As you can see, it's already rising, so let's see how far it could go today. Euro dollar now, very quick on this one here. Yesterday I was talking about this one, and I was telling you guys about a potential excuse me, about a potential rise here. We need to adjust a few levels here, so basically what we're going to be looking here for now is this area right here near the 112.50, approximately there. So basically, if we see a nice good push above the 112.50, because yesterday I was talking about the 112.40, it was kind of playing out initially, but now you can see that now the all eyes are on the 112.50. A nice good pop above this would confirm a forthcoming higher high, and we could see this one maybe traveling all the way towards the 200 EMA. At least this is what we're going to target at the moment. This EMA is around the 112.95, something like that. So that's why for now guys, be very cautious with this one, be very careful. Again, like I said, don't forget we do have the NFPs, so we might get a nice spike here, either to the upside or to the downside, depending on the data, of course. So in terms of the downside, let me just adjust a few of these levels here, guys. So basically the 112.15, of course we still have it as on our radars. That was the low of November, so but of course you can see that it was already kind of violated yesterday. It broke below it, found another good area of support right here near the 1.1205 zone, so just basically just 5 pips away from the 112 area, and then rebounded and pushed higher. So currently it's sitting above its pivot. Let's see how this is going to perform today. Again, like I said, be very cautious. Probably it could just move sideways up until the US jobs release, and if we do get a nice push above the 112.50, then our next target at least could be around this 200 EMA, around the 113 zone, and then we'll just take it from there and see what it wants to do further. Does it want to accelerate further, or is this enough for it? And we'll see maybe a bit of a retracement back down. So that's in terms of the upside. In terms of the downside, well, this is the new level that we're going to be keeping a close eye on, the 112.05. This is the one we will look for a break here below that, but again, for better confirmation, still we have this level right here at around 111.90, which is marked near the lows of this week. So drop below this could lead towards further declines, initially aiming for the lowest point of March here near the 111.75, but if that fails to withhold, further declines are possible. EURGBP. So looking at this one, yesterday had a nice spike here. I was talking about this one in my traders tea time before the end of the day, and basically we had a nice push here. I was talking about this level here, the 0.8550. So we had a nice push here, a strong push to the upside, managed to reach the area around the 0.8594, 95 level, something like that. Just kind of failed by a few, about like something like 15 pips from reaching the 200 EMA here, which is around the 0.8610 level, and then we saw this one sliding back down. Of course, what we could see today is something like this, basically, where we could potentially maybe see another retest of the 0.85 level in 0.8550 level, and if it fails to break, we could see the bulls kind of stepping in here again and pushing this one this time maybe past the 0.8595 level, and then potentially testing the 200 EMA. That's of course in terms of the upside. In terms of the downside, a drop below this key level of support here near the 0.8530. This could potentially open the path towards slightly lower areas, the 0.85 zone, or even just a bit lower here, the 0.8473, something like that, which marks the lows of the 13th of March and the 11th of March as well. So just to kind of make it clear here, guys, in terms of the downside, we need to look for a break here below the 0.8530, and in terms of the upside, oh, there we go. And in terms of the upside, there we go. So, and in terms of the upside, the third time lucky one, we need to see how it's going to perform around the 0.8550. If it's not going to break that, if it's going to consider that as a nice bouncing ground, then yep, we could see maybe the bulls stepping in here, potentially driving this one back up again towards these levels, and especially, like I said, towards this 200 EMA. So keep your eyes on this one. Let's see how this is going to play out, and yep, I hope it works out. USDJPY. Finally, we had a nice push here above the 111.50. I was talking about this one yesterday as well. Of course, now it's holding its path higher. The big question here is, are we going to actually reach the 111.85 zone? So I had this one marked, and I was talking about this one in my previous videos, and of course right now this is going to be our target. I mean, it's currently getting held here by the R1, today's R1, which is around the 111.75. so basically just kind of about a little bit more than 10 pips away from hitting this 111.85 zone. So basically, of course, be very cautious with this pair as well. It could react to NFPs heavily here. So if we see suddenly the drop below the 111.50 today, then, well, I mean, we could potentially consider a further slide lower towards the 111.15, or even actually all the way here towards this this upside support line. This a bit of a tentative upside support line, but nevertheless an important one to watch. But then again, like I said, only on a break here below the 111.50. Now, with this arrow, I need to kind of shift it a little bit higher. Now, in terms of the upside, well, we're going to continue from the very, very short-term perspective. We're going to continue observing this R1 and see how it's performing. If we see a break here above this, then yep, our next target here is going to be the 111.85. But if that fails to withhold, now this is where it could become a little bit more exciting for the bulls, and we could see this one traveling all the way towards the 112, or maybe just slightly above that, the 112.10, and then we'll see how it's performing around there. But that's again only in the scenario if we see a break above the 111.85. For now, we're stuck here, but just slightly below the R1. And keep your eyes on the NFPs today, guys. Let's see how this is. And probably the small little recommendation: wait for the data to come out first, and then make a move. So yep, because we could have some swings here up and down. Basically, like a lot of traders going to get stopped out. So that's why it's better to probably react to this pair, to the moves in this pair. USDCAD, very quickly, the last pair for this session. We're still looking at the same levels here. A break above the 133.73 area, approximately there. This is where we're looking for the upside, and then we could at least target the area around the 134.45, something like that, approximately there, marked near the highs of the 29th of March and also the 25th of March. But if this starts sliding lower, what you could do here for today is observe this 200 EMA, and on the 4-hour chart, of course. And if we see a drop below the 200 EMA, now this is where we could maybe potentially retest this area here, this key area of support near the 133 zone. So very nice, beautiful number of 133 could get tested if we see a drop below the 200 EMA. For now, probably it's better to kind of wait again. Don't get me wrong, apart from NFPs, US NFPs, we do get the Canadian employment figures as well. So again, watch those, and this pair could see some increased volatility during the data release. So check out the economic calendars. Yep, be very cautious with this one. I mean, always have your stop loss in place, guys. But again, probably wait until the data comes out and then probably react to it. But so that's just the idea here. So guys, I mean, small suggestion. Okay guys, I hope you found it useful. Thank you very much for watching and listening. I'll have to wrap it up here. If you want to join me later on at my traders tea time, and that's going to be already past the data release, so we can have a look at the markets and what's happening, then we'll actually take a look at probably the same kind of instruments here. Maybe we'll change the index, but yep, we'll see how that performed. And yep, I hope you have a wonderful trading day, and always have your stop losses in place, guys, and yep, keep an eye on the price action. Thank you very much. Bye bye.